No matter how we earn a living, we all have at least one thing in common. We're going to pay what you may consider a fair or unfair portion of income taxes. Typically, taxes are one of the largest expenses in retirement, but many people try to forget about them or write them off as a necessary evil. Ask yourself, do you know how much you'll pay in taxes now or in retirement? Or even where all your tax returns are located if you face a tax audit? Just imagine if you could have more money in your pocket instead of giving more money away to the government. How much more fulfilling would your retirement be with a larger nest egg to draw from? Or more to spend on all the finer things in life? Having tax information accounted for and accessible makes it much easier to share with your financial professional or tax planner who can help you create strategies to potentially reduce the amount of tax you pay. If you could do that, would it be worth it to take time to get your tax returns in order now? Make the most of your Glyph box by getting organized now and start planning to pay less taxes. Pro tip: most of the time, an employer will deduct taxes owed on your income along with deducting cash that will need to go toward funding your participation in government-sponsored programs such as the Canada Pension Plan. If you're self-employed, an independent contractor or freelancer, it's your responsibility to estimate how much you owe in taxes and pay that to the government. If you're an employee with a side hustle, you will file a statement of your business activities and calculate the taxes on the side income you're earning, in addition to your earnings from your day job, to see the total you need to pay in taxes. If you own a corporation, you need to file 2 tax returns: the tax return for your corporation and a separate tax return to calculate the income you've earned from the corporation. So in this case, it's not one tax return you need to worry about. It's gathering information to calculate 2 returns, which means more paper to keep track of. But you've got it covered with your new Glyph box. If you're retired or an investor with investments outside of an RSP or TFSA account, you will need to keep track of your income from all sources. This may include pension income, investment income, and rental income. At tax time, when all your income sources are tallied up, you may not have paid enough taxes on your income, and you may not be prepared for the tax bill that results. So when you're retired, planning ahead for the tax bill is essential. Pro tip: it's a good practice to forecast your income from all sources and estimate how much tax you can expect to pay using tax software or an accountant before the end of the year. This will allow you to take advantage of opportunities to reduce your taxes owing well before the deadline. If you've had a taxable event over the tax year, such as selling stocks or investment securities outside a registered plan or selling an investment property or business, planning ahead will make all the difference. Contact your financial professional to look at solutions to reduce your income taxes for the coming year, so you don't face any unpleasant surprises at tax time. If you have questions about reducing your tax bill, reach out to us for our recommended list of tax or financial professionals. You can reach us at info@glyphbox.com. Glyphbox is your organization system, so if you ever need to gather this information quickly, you can do it without a lot of stress. Here's how to get started. Get ready to file your tax return paperwork in your Glyph box. How do I stay on top of my taxes as an employee? If you're an employee, your employer will track how much you need to pay to the government and deduct this amount from your paychecks to send on your behalf. In the beginning of the year, you will receive a T4 slip of the income earned and the taxes you paid the previous year. Get ready to file your tax returns as an employee. Step 1. Place all your tax slips you collect during the tax season, including investment income and rental income information, in a legal-sized envelope under the tax returns section of the Glyph box so that it will be ready to take to your accountant or plug into your tax software when you're ready to file your tax return. Any deductions you will be entitled to, such as charitable donations and RSP contributions, should also be kept in this envelope. Step 2. After you've filed your taxes, file 3 years of your tax returns in the tax returns section of your Glyph box. You'll want to store up to 7 years of your tax returns for audit purposes, and the remaining tax returns will need to be filed away in a separate location. What if you're self-employed or have a side hustle? If you're self-employed or in the gig economy and manage taxes yourself, this can be daunting.